right, welcome to Trader Tuesdays. What is up today? Tanush, Dan, Robert, Martin, hello, Micah, Christine, hola, Inigo, Brian, Edwin, Bridget, Hussein, Rocco, and Liam. What's up? All right, most of you guys know the format here. Yeah, I hope you had a good weekend as well, Rocco. The format is use the chat for general banter, follow-up questions, comments, anything like that. And then you'll see that there is a Q&A button that you can press. Please submit your official questions for the little mentoring that we do here for the next half hour via the Q&A button. That's where we'll take questions. As usual, we usually don't get to all the questions. So if you had one from last week, put like some all caps to start it or something and say, hey, from last week, and put it in there. And I'll try to kind of look for that and amongst the list of questions and get to them. I know last week we had like probably 20 questions that we didn't get to. So let's hop in. Hussein says, do you ever look at opening ranges? It's funny. It seems like a lot of people are talking about opening ranges right now. I think some of this stuff kind of comes and goes in terms of popularity and influence by, social media people and stuff. But no, I don't. Have I in the past? Yes, I've checked them out. Someone asked me about a very small time frame opening range today, and I said, I don't look at that, but you know what I do look at? Little colored A on my market profile chart that shows where kind of the opening print was within those 6 ticks, right? That the market profile chart is. And I look at early on when we start to open, is there like a retest that holds the opening print, right? Or do we crisscross it above and below several times? It's simply an early gauge of one-sidedness of strength, from one, kind of participant group. But there's nothing magic about opening ranges. It's the same thing as people who go down a path of kind of looking for like the perfect moving average or, things like that. What happens in the first 30 seconds or the first rotation on a particular time frame or the first half hour or the first 2 half hours, with the 15-minute opening. I mean, there's a million different things like that people have come up with to give them some type of not as good of context as narrative in NADRO gives us. That's what these guys are doing. They're looking for a reference to then create a directional bias from, to create a sense of what's happening relative to. And NADRO traders do that better than anybody else, with a lot deeper insight into what's going on, rather than just maybe an opening range. Opening ranges, if you used them, would need to be placed within the context of where we're opening relative to a lot of other ranges, if you will. Or if you really want to get advanced, then where relative to other areas of value, which is what we like to use. Liam says, hey, what kinds of higher time frame charts do you use in your analysis? I mean, I use a lot of higher time frame charts. And what time frame they are, depends on what market they are. Historically, not currently, but historically, I've used almost exclusively volume-based charts. So if I'm going to use 100,000 volume higher time frame in the S&P, it's not going to be 100,000 volume in soybeans, right? It's not going to be 100,000 volume in the euro futures. I'm going to kind of look at the periodicities I want, and scale that volume based on the volume in that market to kind of see the length of time, if you will, that I want to see. So why not just use time-based charts? Well, lately I have been using a lot of time-based charts. So kind of right now, my S&P setup is my intraday charts. I have two of them. One is 3,000 volume. The other is a 3-minute. And then I have a couple market profile charts. I have a 30-minute bar chart. I have a 120-minute bar chart. I have a 480-minute bar chart, and I have a daily bar chart. So that's what I currently have for some markets. Michael says, what components are necessary in a trade journal? Love this question. Let's be real specific here, though. And I hope Michael means the same thing that I do when we talk about a trade journal. If he's hung around me for a while, he does mean the same thing. Some people refer to as a trade log, or like what we would go down the line of like trade stats as a trade journal. That's not what I call a trade journal. A journal is something that we take notes throughout the session on what we're seeing, what we're feeling, actions we're taking, and the reason behind them. Is that what you refer to a trade journal as, Michael? Or do you want to talk more about the stats side of things? Paging Dr. Michael. Oh, there it is. He put it in the Q&A. Mostly what you're saying, but stats also. If we talk about both, we might end up, not being able to take any more questions the rest of the day. So we'll focus on the journal aspect for now. If we have time, we can come back and talk about trade logs and stats. Journaling. Journaling, I think you should jot down at the top of a journal. I think you should have a process goal, something that you can refer to throughout your day as you're journaling and glancing at that notepad, or whether it's digital or physical. What you're focused on doing that day, right? What you're focused on, something that's within your control that you can set out and win the day. Don't let your P&L be your guide as to if you're winning or losing the day. Let you doing something well that's within your control be your guide as to whether you're winning or losing the day. So that's what I like to have kind of at the top of a journal. From there, I think it's good to jot down key econ releases that you care about and their times, so you can refer back to those. From there, now let's get into the journaling, right? I like to jot down trades that I'm stalking. This is a very, very subtle but extremely important thing to journal. A lot of people always journal long S&P at 41.51, right? Who cares, right? That's a piece of data that's going to be stored by your software. We already know that. So fine, if you get into a trade, let's write down the rationale. But before that, I think it's a great idea. I always encourage people to journal that the next trade that you might be stalking, or the next trade that you're about to be stalking, or that you are stalking, however you want to look at that. Stalking a trade means you might put it on. You're actively looking to potentially put it on. What this is going to do is this is going to look deeper into just the trades that you took. This is going to look at what you at the hard right edge are capable of seeing as potential opportunity. That's a big deal. Most people, when the session is done, they say, oh, I knew this. I should have done that. Oh, that was such an easy trade there. I don't know why I didn't take that. I hesitated, whatever, But What journaling like this is going to do, it's going to prevent you from lying to yourself. It's going to prevent you from being on this hamster wheel that most amateur traders are on, who think they can see things and think they have an edge, but really only in hindsight do they look back and say, oh yeah, my system would have given me in here, I should have done it. Oh, psychology. Bull crap. You couldn't even see it. You couldn't see it at the hard right edge. Trust me, guys, I work with traders, I coach traders, I see this all the time. You can't see it well enough at the hard right edge when it's uncertain. So if you journal opportunities that you're stalking, we know that it was there. If at the end of the day, now we can begin to get better feedback. If at the end of the day, you know that you were stalking a trade and you took the trade, well, great. If you know, and that's beyond the scope of whether or not it was the right thing to be stalking, which we'll get into. But if you were stalking longs, right, and the market tanked and sold off or whatever, and you're not going to be able to look back on that and lie to yourself and say, oh, I knew I should have been short there. Because guess what? Your journal says otherwise. You didn't. Your journal is like real footage of you playing a sport. Otherwise, you're just trying to recollect what you were thinking or feeling or looking for or whatever, because you have like 1,000 thoughts that come through your head every 10 minutes. You think about being long, you think about maybe being short. And then if it actually works, you look back and say, I knew that. Well, no, you didn't. You have 1,000 thoughts, and that was just one of them that you're connecting to what happened in terms of outcome. You are lying to yourself and you don't even know it. So let's start journaling the opportunity that we could potentially see ourselves taking next. And let's start taking a long, hard look in the mirror as to what we're capable of at the hard right edge. Let's get serious about this. So anyways, that's one little thing you can journal. Another thing you can journal, obviously, is rationale for decisions that you're making, right? If you move a stop, let's take a journal entry and talk about why you moved the stop where you did. That might help some of you who just feel like you got to move it to break even, and just because you're trying to avoid the discomfort of having open P&L. Any trade decision that could be scaling in, scaling out, adding to a position, exiting a position, scratching a trade, moving a stop closer or further away, anything, right? Or just an entry, right? Flattening a position. Any trade decision, let's jot down why you did what you did. Interesting market observations. Hey, and timestamp every entry, obviously, right? Timestamp in the left margin with the time, right? 8:57 to carry on here with the things. An interesting market observation. Something you saw on the tape, something you saw in terms of a price action pattern, whatever the case may be, jot down, hey, that was interesting. I want to go kind of like maybe study that at the end of the day, maybe run a market replay through that sequence, whatever the case may be. What else do we journal? Psychology. So you want to be an objective observer of yourself throughout the trading session, not a harsh critic of yourself, but an objective, neutral observer of yourself. And so jot down when you're really scared of giving back open P&L, you feel uncomfortable. Jot down when you know that you just, this could coincide with an actual decision that you made, or one that you're feeling that you really are compelled to make, such as scratching a trade. Jot it down when you're feeling that, noting that. Again, this is game footage of you playing a sport. This is film that you can then go back and see the timestamps and see what was the most pressing thing on your mind at that time. See what opportunities you were looking for at the time. These are invaluable. What is this ultimately going to do? It's going to speed up your learning curve. It's going to stop you from fooling yourself at the end of the day. for the most part, it's going to provide real feedback loops. You're going to get more intimate understanding of your own patterns. You're going to start to understand yourself better. You're going to start to not forget interesting observations that you want to go back and study. Things like that are what's really important for journaling. I was once interviewed a long time ago. I was a funded trader at a firm you guys would all know, and they asked me, what is the one tool, or I forget what it was, that you would recommend for people? And I was like, a pencil and a piece of paper. Journaling is something that I attribute some of the biggest turning points in my trading to. Some sustained effort around journaling was a big deal. Edwin says, aside from risk and size, what does progression on the Apteros prop desk look like long term? Well, that depends on the person, right? So, I'm not sure if he's here on the meeting, but it's public information because he put it out there. Toby on our desk. Let's see if he's here. No, I don't see a Toby here. Anyways, he won't mind me saying this because it's in his journal, or his public journal in our community, where he had about 8 months of struggling on the desk. Now, granted, he was trading super small. He was not, just lighting on fire a ton of money, but struggling nonetheless. It doesn't matter, right? He wants to be progressing as much as anybody. And we made some really drastic changes. We put him on a very specific path for development, and it's really turned his trading around. He's had some of his best months lately. He's had some profitable months, things like that. So that path, like, it's because he's about 1 year in, right? So the path for him is very different than someone else who comes in who's really ready, and more of like an established CPT. For them, again, it's going to look different. There's not a blanket, like we have desk only training and some things that people can work through and progress through in terms of different phases of execution that we'll put them on and stuff like that. Obviously, like you said, risk, that's a given, that we're looking to build that up over time. But there is no path, right? In terms of just like, hey, everyone's on the same path. Different people are dealing with different things, whether it's their niche, basic fundamental errors they're making, whether it's risk management related, whether it's trade management. We'll dive into their stats and take a look at where their biggest inhibitors to greater performance are. And then we'll come up with ways of monitoring that particular improvement. Some guys I've urged on the desk lately to pick up their sample size. I thought they weren't trading enough relative to the number of opportunities that were there on any given month. It's just different. It's just different. And that's why something like being on the Apteros desk, if you essentially believe in me, at this point in time, right, we're gonna have other people who step into management type roles and whatnot pretty soon. Taking like senior traders and things like that. They're going to be able to mentor guys and whatnot, which has always been my dream. I have no bigger dream than for Apteros to become less about me and more about some of the studs that we have on our desk who take roles in public facing education. There's going to be senior traders who start to do mentoring instead of me just doing mentoring. And obviously internally, those leadership roles are already starting to form. So that's the, you want to go about this on your own, like, good luck. My goodness. You want to sit in your bedroom and have the freedom, or you want to be free and you want to sit poolside with a laptop? Good luck, man. be a part of something, be on a team where people are going to keep you accountable and sharp and growing and help you see things that you can't see. Good luck doing it any other way, guys. Dan says, hey, Merritt, thanks for taking my question. Could you give an example of MGI from today's session? What's your definition of MGI? So for everyone who doesn't know, MGI is what we call market generated information. And that's going to be different things for different people, but it's the variables and references that you look at, right? It could be an indicator, it could be a price action, it could be order flow, it could be, anything. But it's direct or derivation of price, time, or volume, which are the data points that we have to work with when we're trading markets technically or quantitatively. So that information is market generated information. And why does that term even exist? I think Dalton coined that term. I'm not sure. But I certainly use that term a lot. A lot of market profile people use that term a lot. I think other people are even starting to use that term a lot because it's such a good thing. Why do you think that term is held the test of time, let's say, and is a popular term? That's because traders want to use things that they're imposing on the market that come from them as a person, them as someone who's anticipating what might be in the future, or what has happened in the past, or what they're scared of happening next, or what they think must happen next. None of that is market generated information. That's why that term has held the test of time, is because humans are so bad at using other pieces of quote unquote information other than stuff that's generated directly from market. That's why that term exists. And that's what my definition is of it. An example of that from today's session. So you guys may not believe me, but I got long from like 07, I believe, early on. There was a severe lack of selling on the tape here. And this is into kind of a decent reference. The narrative is not great today in the S&P. That's why I didn't put out a DMI, but we did have, as you can see, there's a bull zone here. There's a big bear zone here, which is not relevant. That's a big, huge, wide area. I could just as easily remove that from my charts here, and not use that at all, but I'll keep it there. But the short term, I'm looking at this kind of bull spot here. So I was long from here, weak sellers below here. I did have a little back and forth with some like stopping out and re-entering in here, but ultimately I was long from this turn. Again, I think it was 07. And I'm going to get to the market generated information. Well, there's one piece of market generated information. The sellers I thought were really weak into these lows. Okay, that was my read on the tape there. So anyways, take some profits here. This is a little kind of almost what we call a compression, just a short-term one, right? Micro type stuff, price action stuff. We put in a few highs here and we're kind of compressing, right? So I thought that at least a stop run, if not a big break, was there. So I actually added a bit and then just pretty much ended up, scaling and scratching that ad for tiny gains. I stopped out somewhere during this red bar here. I did not like the speed of the tape right there. Now, granted, this is a place where I was looking to add and get bigger in the trade. And I was actually this was during our 10 o'clock meeting on our desk. And I was telling them, my position and what I was looking at. And I said, you know what? There's a big shift in the tape here from the sellers. I'm probably not going to add or do anything in here. That was my original plan, but I'm not going to because I don't like what I'm seeing. And then sure enough, as soon as we ended that meeting, just before, I guess, 10:30 or so, there was a frenzy in the tape here. I didn't like the speed of the tape. I thought that these lows were going to get ran, and I wanted to see what that looked like. And you could ask anyone on my desk, they have permission to share with you, kind of things that I said to them during this time, if they're here and you know them. I said, look, I'm going to reassess. I think, this is pretty stop runny here. And so I actually flattened, and then they really didn't do much, right? We wicked this area, and as soon as we got back above that line right there, I was back in the position. And so then I scaled a little bit somewhere around here. Don't hold me to it. I scaled some right here when there was a strong bout of selling that came. And then we went up, we went down, and I added right here. This is just kind of a standard type play, RTH here. I scaled. No, I flattened right there. I did not like and continue to not like what I'm seeing from buyers at this point in terms of order flow. The narrative isn't super strong today, so I'm leaning more on order flow. Granted, this may turn into more of one of those, as we've seen more frequently in the S&P, a passively driven day. So we don't have really strong buyers here, but we may just keep trending. Who knows, right? But what do I know? I know that this is not a day that I am gonna force and overstay my welcome and really, get super aggressive, because I don't have a really strong narrative here. I had something enough that I thought I could take advantage of, and I crushed that. I did a great job of that. So anyways, there's a little more, probably more than you asked for, Dan, but hopefully that was helpful. We talk about a good bit of MGI there. Okay, Graham says, how do you handle a day after a bank holiday in relation to market profile? Do you merge with the overnight previous day last Friday? Great question, Graham. I essentially ignore the holiday session. Today, I was, and in fact, the one screenshot I think I've shared with any person today, wow, crude oil, is I took a look at yesterday's the last full session we had, right? The 27th, Friday. I took a look at where its main distribution was, like volume profile, market profile. And my note during this trade was that from here to kind of, I forget where it is, from here to here, I could look on my other charts. So let's see here. Yeah, so let's call it 30, 31.50 down to, 11. So in that area, right? So here, this box, nothing significant was happening. There's nothing that's significant about that. We opened, we fell back into that range from Friday. We test the low side of it. I'm long. We rotate up to the upper side. I'm taking profits. And now something changed. This is where something changes. And now you're seeing the breakout hold, right? So I noted to my desk during that time when I was long, during this area here, that, what are we talking about here? Oh, I was referencing the prior real session, non-holiday session profile. So I tend to ignore the holiday session, quite simply. There's Michael's follow-up. Please use the chat for that, not the Q&A. Nika says, why did you pick ES and CL primarily? As far as I remember, you said NADRO also works for stocks. They seem to be less choppy. You can pick them in play without having to wait for quiet periods. That happens in other markets. Yeah, I don't know. I think that might be misquoting me a little bit. I think that stocks, especially what someone might call in play stocks, big news catalysts, big gaps, big, relative volume. A lot of times they're actually gapping way away from recent references. And if there is a weakness in NADRO, I think is that when you gap real far away or take a real sudden move real far away, like we saw in crude oil earlier this year, well, you don't really have much to lean on in terms of the references that we would want to lean on for setups and trade ideas. You have intraday stuff. You can scalp momentum. You can lean on shorter term things all day long. And that's what I do in those conditions a lot of times. But in terms of NADRO, with the emphasis on narrative, it actually doesn't work as well for things that, such as like perhaps in play stocks, in my opinion. If you're someone who's like trading Tesla every day, right? Like focused on a market that's not necessarily all over the place, and it's trading, around the prior couple days value areas and things like that, then yeah, it sure you can use it. And it's, as good as it is in the S&P or anything else. I picked the S&P and crude. At first, for me, it was just crude. Well, before that, it was the Russell. Back when before the Russell moved to the ICE exchange, and then everyone quit trading it, and then they now brought it back as the RTY. Does anyone here remember what the symbol was when the Russell was originally on the CME? Wow, I'm actually an old enough guy to say something like this now. Anybody remember? It was all I traded. Nobody? Well, it was the TF. The TF was the symbol. And I was really focused on trading it. And guess what? They moved it to ICE, and nobody wants to trade on ICE. So I looked for other places. And I thought that, so the Russell is a thinner product than the S&P, which is a thinner product than, let's say, the 10-year note, right? Or the 30-year treasuries or bonds. So everything is kind of a lot of the nature of market movement comes down to liquidity. If the book is really, really thick, there's a ton of like passive participants like just ready to trade, then it tends to kind of be more back and forth and be slower and less range. If there's less literal contracts on the bid and the ask, then like the S&P is right now relative to historical norms, what do you get? Higher ranges, faster moves, right? That's the nature of movement. Liquidity is one of the biggest deals in terms of what people would refer to as the personality of a market. It's all about liquidity. So for me, having been on the Russell, moving to the crude oil was a very similar in nature. They like to kind of run stops through areas. They like to have decent momentum and move fast, pretty quickly if you're wrong. And during that time, if it was the summer, then guess what? The S&P might have had a day with a 15-point range for the day, all day. Okay. Like the S&P right now is putting in 20 handle rotations on a 3,000 volume chart, or a 1 minute chart, what it used to do in a day total. So I wasn't too interested in that during the summer, at least when volatility was low back in the day, when the world was normal, like pre 2008, just like normal financial markets, which we haven't seen in a while. So crude oil was a nice fit for me to transition to. The S&P probably worked its way into my like standard repertoire simply because of its popularity, quite frankly. Everybody talks about it. Everybody does analysis on it. Everybody's posting about it. And when you're a young trader coming up the ranks and figuring stuff out, you say, hey, everybody's all about this. Let's check it out, right? So I kind of added that into as like a secondary market for me. And so I went through a long period where there would be times where I would only trade crude oil for months at a time, and then like the S&P would, like, essentially volatility would spike, and I'd be like, oh, the S&P is great. I might exclusively trade the S&P for 2 weeks. And then there's times where you trade both, and stuff like that was kind of like my standard MO for quite some time. So anyways, I don't have anything that's like going to be enlightening for you in terms of why I picked those markets, but that's kind of the best I can tell you in terms of my story and how I ended up there. Rocco says, I've noticed that in the last week's daily market insights, you've mentioned scalping a few times. I've been very disciplined on sticking to my targets, but last week it was showing up short. Instead of pulling solid profits off the table, I ended up with break-even trades. Can you speak on what market conditions you prefer to scalp versus hold to targets? And how would you handle a trade that's not making it to target? You do as I did or pull parts off. This was a problem in my previous trading. I have been able to change with Nadro. So I mean, one answer that's kind of universal across conditions, and you're just going to have varying levels of, profitability and stuff, is to scale out, right? So it sounds like you might be doing some of that sometimes. I can't tell. So you get into a trade and then you scale out a little bit here, and then it goes a little further. You scale a little bit there at key places, right? Like we use DVA, we use the next possible, laws of market dynamics, destinations, things like that. So what that's going to do is you're at least going to make some money, even if, let's say, that final core position or runner or whatever you want to call it doesn't go to that major target destination. Another thing is the dynamic way of managing a core position, right? Like we teach in Nadro. So if the imbalance fails, you can take what profits you have remaining there. If the market closes at the RTA session, you can just take whatever you have. So those are a handful of ways that you don't have to do that. But more specifically to your question, I think that when there's wild gyrations in a market, a lot of times being less like, oh, well, this monthly narrative time frame says that this major destination is here, and that's like extremely far away from where we are today. So like being kind of aware of, even with wider than normal ranges, where kind of the daily range like might make sense for a move, and then not being stupid in terms of like pressing for something that's just really not feasible, especially if it's a mean reversion overall move. And so I'm glad you said that. So he said, like, yeah, sometimes he's scaling out, but he's really trying to hold the majority of his size for the target. That this gets into a really interesting conversation, which is around Nadro's all framework based. I share with people what I do. I teach people how to see risk reward landscape. They can pick and choose timeframes or priorities of how they go about doing that. And that one of the biggest differentiators between traders in terms of becoming your own trader is trade management, right? Do you want to be the trader? What do you want, Rocco? Do you want to be the trader? Sounds like we understand what you want here. You want to be big win trader. You want to be big risk reward, hold all or the majority of your position for real targets, and one thing that you can settle on and become okay with is that might be what, here's just one possible outcome. That might be what you focus on doing. And there's going to be times where the market goes through phases, right? For whatever reason, where the conditions are simply not conducive to that strategy. And you might spin your wheels for a month. You might not crush it for a month or 2 months. But then conditions will change and your methods will come back into being what's really working well again. And so you're going to be one of those traders by really sticking to a way of doing things where you have periods like any system, especially less and less versatile systems, where you have periods of overperformance, you have periods of underperformance. I think traders have a hard time kind of like getting to that point where they say, you know what, part of my job here is to like sit down and do my job and trade my system my way. And that means that the market is sometimes going to be very favorable to that and sometimes very unfavorable. And that's part of the game. But everybody wants to adapt day after day, week after week, and tweak things all the time, essentially trying to curve fit based on what happened the past 5 trades. right? And that's not the path to CPTville. That's the path to constantly, chasing your tail. So those are some thoughts there. Hopefully some of that's helpful to you. But there for me, I'm more of a versatile trader, if you will. Part of NADRO is that it's not a trend following system. It's not a mean reversion system. It's a contextual system in which you decide which of those tactics, essentially, right, in a nutshell, are appropriate for here and now. So there are times where I think to me, ultimately, if you want to get the closest you can to the best trade management in the world, which it'll never be perfect, but if you want to get good and you want to be versatile like I am, I'm not saying you have to be, but if you want to, the contextual read, context is king. Context determines whether it makes a lot of sense to really hold for that big core position runner, or whether it makes more sense to just say, you know what, we've had a great rotation, like my trade today that I narrated for you there. I saw something I didn't like. I was in from here. I forget where I exited. I think sometime just after 11:30, so somewhere in here. I think on this, yeah, it was this up move here, so somewhere right in here. I just want to be specific. I don't ever want to mislead people or accidentally say something wrong when it comes to trade fills and me saying I did this. What was I even talking about? So I made the choice today to just come out of the trade at a very like core position target, kind of place or anything, just because I didn't have the strong context at my back. I didn't have a really good narrative that I wanted to lean on and wanted to risk open profits for the reward of the bigger target. So that's a just perfect case in point, case study there around exactly what I'm trying to relay to you, which is around the read on context for me dictates what I'm doing in terms of holding a big, core position or not. All right, guys, we've gone over a bit here, but was having fun and just talking trading. So hopefully you guys found this helpful. We will see you guys next week, same place, same time. Adios.